Union.
The following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Welcome to Good Money Moves. I'm Andy Brownell with Jenna Taubel, Director of Brand and Digital Member Experience at First Alliance Credit Union. Hello, Jenna.
Hey, Andy.
You brought along a guest?
I do have a guest with me today. I have Danielle back with us. She's been on the show before. She's our member experience advisor here at First Alliance Credit Union. So Danielle, I guess, why don't you reintroduce yourself to our listeners and tell them a little bit about what you do at the credit union?
Absolutely. Thank you guys for having me. As Jenna said, I am Danielle Sommerfeldt. I am the member experience manager here with First Alliance, and I have been here for a little over 4 years. I work directly with our frontline team members who work on new accounts, loans, and all sorts of different deposit accounts. And so that's what we're going to talk about a little bit today.
Fantastic. So last week, we talked about certificates of deposits or CDs and CD ladders.
Yes.
What's the Good Money Moves topic today?
Yeah, so we're actually going to be revisiting a conversation that we had a few weeks ago when Mike was on the show with us when we were talking about the Silicon Valley Bank and the importance of understanding your share insurance. And so it was a couple weeks ago, but we talked about the fact that thanks to the NCUA and the FDIC, if you have your money in a credit union or a bank, your money is insured up to $250,000. And now that's obviously a lot of money for most people, but what if you've been saving for years or you make a lot of money or you have investments that have paid out and now you do have more than that in your checking and savings accounts, right? Fortunately, there are some steps that you can take to make sure that your money is insured, even if you have over $250,000 in your account. And that's what we're going to be talking about today.
In other words, we're talking about a good problem to have.
Yes,
Exactly.
So when I heard the NCUA and FDIC insured the money in accounts up to $250,000, I did. I mean, that was something that came to mind right away because I'm well on my way for retirement savings. And what if you did have more than $250,000? Danielle, what kind of advice do you have for us?
Yeah. Well, my first piece of advice is to really get an understanding of what the rules are with NCUA and or FDIC that they have in place for the insurance. Make sure that you understand that they will insure you up to $250,000 per depositor, per institution, per ownership category. So while that seems like a lot, we'll explain a little bit about that. The first thing you'll want to do is open up some accounts with different ownership categories. For instance, if you are in a long-term relationship, you could open up a joint savings account, which is a different ownership category than just a single account. The NCUA will insure the money that you have in that account in addition to the funds in your single account.
Oh, did not know that.
Yes. Even better, since the joint account is owned by two people, the NCUA insures this type of account up to $500,000 instead of just the $250,000. That makes an ideal place for you to store your money with you and your partner for things that could be really important for you. Money down on a mortgage, money for a family vacation, money for a new car, even money for your children's education.
Wow, I've already learned something that we're only a few minutes into the show. And obviously, it's a good way to ensure money in your savings. Are there any other ways I can make sure my money is insured if I have over $250,000?
Yeah, absolutely. So another thing you could look at doing is putting your funds into an IRA, which is also known as an individual retirement account. An IRA is another type of ownership account and is also NCUA insured up to $250,000. So this would be a good idea if your goal is for long-term planning and you're looking to do some savings for retirement. And there's also some additional benefits that go along with an IRA, such as like tax benefits, and what kind of IRA benefits you would get would be a little bit different with a Roth IRA versus a traditional IRA. An IRA lets you deduct the amount that you deposit from your taxes, but you will have to pay taxes on the money potentially when you withdraw it, depending on which type of IRA you go for. But a Roth IRA would allow you to, it wouldn't be tax deducted right out of the gate, and you'll just have to pay for the withdrawals later on as they come out. They would be tax-free.
Sure.
So if you want more information, obviously when we're done with this podcast, we'll have some more information for you, but we'd be happy to continue along that idea with the Roth IRA or the IRA training.
Yeah, there's another one. I had no idea that they could be federally insured under those programs.
Yeah.
Yeah.
So obviously good to save for your retirement. I hope everybody is. And you probably also want to have several income streams when you're looking at retirement funds. What's another tip you have for us to protect our money?
Yeah, another really great option, which we are tending to see a lot of more recently, is around trust accounts. So a trust account is another type of ownership. Again, it can be covered under NCUA up to $250,000. However, there are some really additional benefits to this, and that the trust could potentially be insured for up to a lot more than that. So the NCUA will actually insure a trust account up to $250,000 for each beneficiary of the trust. So for an example, if you have two beneficiaries, the trust will insure that up to $500,000. If you have three beneficiaries, it would insure them up to $250,000, so on and so forth. The trust also has a lot of other benefits and advantages to it. They let you determine who gets your money and for what purpose or when. They get they're a lot of help too when you're doing estate planning, and allows you to set up some stuff. Could potentially be, tax benefits, charitable gift benefits, other things that can help you to make sure that your money that you have been saving can be used in the way that you would like it to be used.
And I imagine if you're thinking of a trust, this is something you need to talk to an attorney about.
Exactly, yes. You would want to speak with an attorney. There are some fees right away to set that up, but it could potentially be worth it in the long run. And
the NCUA insurance, the account actually has to be with First Alliance or another financial institution. And this doesn't count when you'll say you're going through like a brokerage place or something like that.
That's a really good point. Yeah, so investments would be a little bit different. So obviously we want you to invest your money with us,
right,
with checking and savings accounts. But yeah, from a brokerage standpoint, you would want to speak with the investment company.
Yeah, but okay. Yeah, I'm pretty sure that they fall outside the insurance protection.
I believe they do too.
Yeah.
Yes.
So
Yes.
That's a big plus
Yes,
for the credit union. Then, is what
exactly.
you're telling
Yes.
me.
Yes.
Yes.
All right. We're talking about if you have these large sums of money for savings, for your retirement, for buying a home, whatever it may be, and you want to make sure they're protected. All of these topics so far have been eye openers for me. Ways they can be insured through NCU. I'm going to get it wrong. NCUA and the FDIC. And we'll continue with that with Good Money Moves today on News Talk 1340, KROC AM and 96.9 FM, right after this quick break.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 Live. Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
Welcome back. Good Money Moves. Today's topic is protecting your savings, which can be much more than just a savings account. As long as you're at a financial institution that is protected by NCUA or FDIC, and in this case, NCUA, because we are with Jenna and Danielle from First Alliance Credit Union. and I am learning a lot today already.
Well,
So
good.
let's keep going, Danielle.
Yeah.
Any other ideas for us to protect our big time savings?
Yeah, absolutely. There's always different ways too that you can look to invest your money. So if you do have over $250,000 in your checking and your savings account, you might want to think about looking into investing some of that. We know that that could be a little bit higher risk, just to keep those funds into your own banking account. However, investing your money can also help it grow faster than it would just keeping it in the savings account, as we do know some of those higher risk accounts do have higher yields for their savings. There's also a lot of different ways that you can invest your money through mutual funds, index funds, individual stocks, government bonds, and a really hot one right now is real estate.
Oh, yeah.
Yeah. So it's really important that, you think about different ways that you can invest your money. There's no one size fits all. Each person is going to be different. Each situation is going to be different. So the best advice that we could ever give you is just to do your own research and figure out what's going to really work best for you and the situation that you're in today. And then really figure out, again, how much are you willing to invest? And then think about what tolerance of risk you're willing to take. Some people are more willing, depending on, their age and where they're at. If you're getting closer to retirement, we do see a lot of people who aren't really interested in taking the risk to potentially lose a lot of money. But we do see at a younger age, people are more willing to put themselves into riskier financial situations to get that bigger return.
Yeah, and they have more time to recover if it goes south on them.
Exactly.
Now, if I'm going to invest, from our discussion so far, this is part of the weighing of the investments is that risk factor. And it sounds like through a lot of very creative ways, I could eliminate the risk entirely by going to First Alliance and using different ways of categorizing my savings accounts, an IRA, those sort of things. Well, what kind of vehicles can I look at? Right away, Jen, I'm thinking of certificates of deposits, right?
Yeah, absolutely. I don't think there's necessarily a perfect way to do it. Everyone's situation, again, is going to be very different. But yeah, if you have money at the credit union, you are likely to be covered up to that $250,000 guaranteed, right? Anything over that, that's where we want to start talking about, well, how can we structure the funds that you have across maybe different types of ownership, across different account types? Do you need to have a joint account for some of your money and an individual account for some of your other money? That's where it can get a little bit more complex, and where we would really want to sit down and talk to you one-on-one to understand, what is your goal with these funds? How easy do you need to be able to access this money? Are you looking to continue to grow this at a quick rate where a CD might be beneficial because you get that higher rate? Or are you looking to be able to have more access to it, whereas something like a money market or a checking account might be the better option? So again, there's no necessarily right or wrong way. Well, there's definitely a wrong way to structure it, and wrong would be that you aren't covered by NCUA, but there's no perfect way for any to set it up. It's really what works best for you and your goals with your money.
And what's fascinating about our discussion so far today is that when that Silicon Valley Bank failure occurred, and I heard the media reports about just what we're talking about today, the NCUA and FDIC protection, I got the impression that you would be forced, I could put $250,000 in this financial. If I wanted additional money insured, I'd have to go take it to another institution. And this is great because I don't. You just have to structure it differently.
Yep, exactly. Yeah, and true, you will find some members who maybe don't know that, right? So they maybe have been moving their funds around to different financials, assuming that that's the best solution. And that can be really hard for them to keep track of all their different accounts, maybe different deposit regulations, different withdrawal limits. A lot of different credit unions or banks essentially do have different structures to their accounts on what their requirements are. So it really is important that they just speak directly with your credit union, especially us here at First Alliance, to get the information and determine, how can we help you structure this with us so that we're not having you run around from bank to bank trying to make sure that your accounts are in good standings.
Excellent. We're talking about protecting your big time savings, your long-term savings, more than $250,000. Let's put it that way. On Good Money Moves, and we'll be back in a moment on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. Talking Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340 KROC AM and 96.9 FM.
It is Good Money Moves. The topic this week, protecting your cherished savings. What you can do if you have more than that $250,000 limit for the NCUA and FDIC insurance, which I've found out already is not really a limit. There are ways to get past that limit. We're with Danielle Sommerfeldt and Jenna Taubel at First Alliance Credit Union. I guess any other tips?
Well, I think I would just go back to the beginning of the podcast when we talked about the fact that, it's $250,000 that is covered through the NCUA, which again, NCUA is actually the National Credit Union Administration. So just so people can understand maybe a little bit more about that. But it's $250,000 per depositor, per institution, per ownership category.
And the category is the key part.
The category could be a very key part. Again, we talked, so you could have a single ownership, you could have a joint ownership, you can add beneficiaries to your account, and they then qualify for $250,000. So the ability to add people either as a joint borrower or as a joint owner, or as someone who could benefit from your funds after you have passed is also an ability to get them to be covered under the NCUA.
The other option is shop around, right?
Absolutely. You definitely could shop around. There are people, again, who believe that having multiple different credit unions is the way to go, just to keep themselves protected. But I would really strongly encourage you to talk to your person that you're opening your account with, or any person that you're comfortable with that works at the First Alliance Credit Union, and figure out what we could do to restructure some of that ownership to keep your accounts in one place. It'll make it easier for you in the long run, and just keep everything in one. You can potentially even, build your relationship with the credit union, which would allow you some, you could look at better interest rates for saving your money. You could look at, getting credit cards and different types of things that you have with our credit union, and then look at, is one credit union closer to where I physically live that would make it a benefit for me? Or do I prefer an online service more than a different credit union?
And I imagine
go ahead, Andy.
Being a credit union, we've talked about in the past, and being essentially nonprofit, you have the ability in most cases to be very competitive with the interest rates you offer to savers.
Yes, absolutely. Absolutely. Yes, we definitely offer a much better rate than you will find most other places in the local market. Absolutely. On both deposits and loans.
Yes. And truthfully too, right? NCUA insurance or FDIC insurance is set up for in case of something happening. So financially, for credit unions, we do post where we're at on a monthly basis. And so you can see our numbers, and you can see where we're doing financially, how, things are holding out. And I can, tell you as of today, First Alliance is doing really well on our numbers. So we're excited to share that.
Yes. Yeah, it's not a secret.
And I bet you would be especially pleased if somebody was listening to this program and happened to have well over $250,000 to deposit, that they could come to
Yes.
you and you could map out a way that will allow you them to have that protection, that insurance, and still have it in just one place.
Absolutely.
Yes.
Yeah. Yeah. My team that I work with directly are member experience advisors in the branch, and then our contact center MAs and LAs who answers the phone. They're always happy to have those conversations, to meet with you in person, or just to, yield phone calls or chats if you do have any questions regarding bringing over your memberships with us.
So I figure if I bring $1 million up to to the table, you're going to roll out the red carpet for me.
We might. I'd be happy
just
to do
might.
that for you, Andy.
Well, don't worry about it. You don't have to worry about the red carpet for me. It's not going to happen.
Okay, we'll get a
because-
blue
not
carpet
because-
ready. We'll get a blue carpet ready for
Okay.
you.
It's not because I'm not willing to bring my funds there. I just don't have the $1 million. Sorry. Well, as always, great information and a little bit eye-opening today. So I appreciate it. Danielle, thanks for coming along and sharing that with us. And I bet, as we've mentioned a couple times, there's places or a place where we could learn a little bit more about NCUA insurance, particularly seeing as we're talking about First Alliance Credit Union. Jenna, do you have can you steer us in the right direction?
You know I can. I always encourage our listeners to visit our website at firstalliancecu.com. Get subscribed to our blog. We release new financial tips and advice there every week. You can go back and listen to past episodes of this show at firstalliancecu.com/podcast or on krocnews.com. You can also subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. And if you love our show, please take a moment to leave us a review on your favorite podcasting platform. If you have a financial topic or question you'd like covered on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, like Danielle said, I strongly encourage you to reach out to our team at First Alliance Credit Union. They can help you start making good money moves today.
And if you have that $1 million deposit, call ahead so they can get that red carpet ready.
Yes.
Okay.
And we might even bring balloons.
And remember, of course, First Alliance Credit Union is federally insured through NCUA and an equal housing lender. Thanks, everybody. Jenna and Danielle.
Yeah.
Thank you, Andy.
And Jenna, we'll chat again next week with another Good Money Moves episode right here on News Talk 1340 KROC AM and 90.